Hi everybody, Dave Aquino at Basecamp Trading. This is the members only video for Thursday, November 9th. So, Powell had his say at 2 o'clock. It was kind of eventful with some climate protesters, to say the least. But that's not the reason why the market fell. Basically, the Fed chair reiterated that as a group, they're not confident that it has done enough to bring inflation down. And that basically could cover a couple of different things. It could be the fact that they want more data to get a better idea of how likely this is to become a kind of a permanent condition. Is it going to stick basically? Is there a chance that this might be just temporary and then pressures could come back to raise inflation again? Because it definitely hasn't hit the 2% target. So the reaction that we got at 2 o'clock, you can see here. I'm sorry, at 12 o'clock and the breakdown. I'm sorry, 1 o'clock. Yeah, I'll get my time right. 1 o'clock. And here's the subsequent fall. Now, the nice thing is it broke the previous day's low, and then it continued to move lower down towards the ATR low. However, we got about to the 43, 45 level. You can actually point that at roughly 43.50, started to find support, and we just basically sat at this level. We didn't rebound, we didn't retrace, but again, it was definitely weaker. One reason for the weakness is kind of the movement in the bond market. Now, the first move that occurred right around 1 o'clock, I'm sorry, that's what we're referring to in SPX, was the Treasury bond auction, and that caused the big drop here at, let me look at the clock again, because remember it was just by 1 o'clock. We had that big drop in bonds because of the Treasury bond auction and then the rebound. Here's the 2 o'clock hour. It really didn't do too much in the bond market. Most of the movement really was felt in the stock market. Let me jump before that. The 20-year bond kind of stabilized and the yield kind of caught itself at 4.6%. But here's the stock market again. It's going so slowly here at the end of the day. Here's the 1 o'clock move. And then here at 2 o'clock with Powell, the market just kind of continued to drift to the downside. So this the combination of the two factors. We'll see if the market continues to fall here on the hourly chart. We definitely have some weakness. We've got the low from earlier in the week right there. That would be the next target, 43.34. And then roughly the 50-day EMA at 43.25. So we're going to continue to watch that and its market action tomorrow. But again, this could also rebound a little bit tomorrow. Maybe retest this 43.60 area, 43.70 area before rolling over again and maintain a lot of that bearishness. The NASDAQ also is weaker. We dropped about a little bit less than 1%, 0.83%. And, well, that was the SPX. I'm sorry. Give me 1 second here. I'll let the QQQs load up. You can see we dropped about 3 points, and that's on a $369 position. That's also 0.8%. So again, we have some bearishness on the hourly, and I think we could have some more follow through tomorrow. You can see Apple all the way through. All the major tech stocks are down, save for Nvidia, which is about 1% higher or a little bit less. Meta is up maybe about a quarter of a percent, but everything else is down. Tesla is showing considerable weakness. Oop, there's the bell. And again, that possibly is because of downgrades of the stock and some projected underperformance. It came down, actually hit that 206.19 level, filling the gap. The next downside target is probably the round number of 200, and then below that, the 193.95 area. So actually, we have this pivot low here at 202.5. That would be the next support level. Then the 200, then the 194 and a half level. So that's the one that I would be more concerned of in terms of market movement and therefore opportunity. So just be careful. The market's a little bit weak. The Federal Reserve puts a little bit of doubt in the air, and the market decided to take some profit off the table today. We'll see which way the market goes, if it has any follow through to the downside, or does it recover, kind of catch itself, and then maybe sets itself up for a positioning for next Tuesday's CPI number. Okay, thank you.